I'll start today's video of how to become rich by asking you a question. When you see an expensive car pass by, what do you think? Oh, what a car, but I cannot afford it. Or do you think, that's a nice car, how can I afford it? Thinking like the first person? But you have a poor man's mentality. If you're thinking like the second person, you have a rich man's mentality. So feel free to skip a couple of minutes and jump right into the prerequisite section. But for the first category, I'll give you an exercise to practice every day starting today. Whenever you think that you cannot afford something, replace it with a question. How can I afford it? You will see the difference yourself. You can find the same concept in Mr. Robert Kiyosaki's book, The Rich Dad and the Poor Dad. Link is given below in the description box. Now that you have started working on your mindset, let me give you the list of prerequisites before we start working on how to become rich plan. Embrace yourself because this will be an intensive, information heavy and long session. Try to digest the concepts, rewatch the videos as many times as needed, and let me know if you cannot understand something in the comment section below. I'll try my best to explain. You need to reserve some emergency cash. I cannot stress on this point enough. You must have a sufficient amount of emergency cash. Let me repeat. You must have a sufficient amount of emergency cash. Now let me define emergency for you. As per dictionary, a serious, unexpected and often dangerous situation requiring immediate action. Simply put, accidents, severe illness, job loss or that sorts. What doesn't constitute an emergency is your wife's birthday or a gift for your boyfriend. Come on, don't curse me. Most of the people doesn't seem to get the idea of emergency. And they blow up the cash pool in such sort of things. The next obvious question is, how much amount? 3 to 6 months of liquid cash seems to be a good idea. But that is totally dependent on you. It is such a relief that we have credit card these days. Don't you think this is one of the best decisions you have ever made? Now you can spend effortlessly during vacations, shopping, movies and whatnot. Feels superb, isn't it? Will you still feel superb if I tell you that you pay a 40% interest on the balance and sometimes fine for late payment plus maintenance fees? Shocked? Let me explain. If you check the credit card statement, you will find that your bank charges at least 3.25% of interest per month, which amounts to 40% interest per annum. Also, they have a disclaimer saying that this can change periodically based on your spend, payback and utilization pattern. Wow! And when you invest your hard-earned money in a FD, you only get a meager 7% interest. Is it worth to blow up your hard-earned money like this? Listen to my advice and get rid of those credit cards. Similar is the case with personal loan, though not as severe as credit cards. Let's say you take a loan of 5 lakh rupees for an abroad vacation. By the end of 3 years tenure, you realize that you have ended up paying almost 2 lakh as interest and other fees. But how is this possible? The bank charges only 13% interest. As the bank charges 13% interest per annum, by the end of 3rd year, you have paid 1 lakh rupees as interest. Now add the processing fee of 2.25%, which is around 11,000. The amount becomes 1,17,741 rupees. Add in the combined taxes of 15%, the amount becomes 1,92,741 rupees. Now let me ask you something. Do you still think taking a personal loan for vacation was a good idea? Next time, you think hard before you apply for the personal loan. You may be jeopardizing your family's financial health. Also, try to minimize any other loan that you have before embarking on the getting rich journey. The last of the prerequisites are insurances. Are you skeptical about taking a life insurance? God forbid, if something happens to you, what will happen to your family? Will they be able to sustain their lifestyle? Or at least, will they be able to pay off all the mortgages? Are you still skeptic? Then close the video and go on to something more entertaining. You are wasting your time here. Though there are various products for life insurances, in most cases, term life makes the most sense. Let's say you are 35 years old with a spouse who is also working. You have a 5-year-old kid. In that case, you may need a term life for 20 years. By the end of the tenure, hopefully, your 25-year-old will be self-sufficient. But if you are a 25-year-old with no child, you may want to take a longer period insurance. But feel free to do your own research. However, before selecting the insurance, remember to check 3 important things: sum assured, tenure or time period, and the premium that you will be paying. And for God's sake, please don't select a policy for the sake of saving tax. Select something which will give optimum protection to your family. Crisis can strike anytime. You or any of your dear ones may get hospitalized. With the high price tag that is attached to the medical expenses, you can go bankrupt. In such a situation, health insurance will come to your rescue. But before selecting any of those, please remember to check the copay amount, waiting period for pre-existing diseases, whether lifelong renewal is possible or not, how much they pay as room rent, and what are the disbursement rules. So invest some time in doing proper research before selecting a plan. You don't want to end up in a sticky situation during your time of crisis. Do you really need a home insurance? Come on, you're staying in that house for the last 30 years and nothing has happened. Let me refresh your memory. Do you remember the tsunami that happened in 2005, which affected many parts of the world? Or the earthquake that happened in 2015 in Nepal? Many people lost their lives and countless people have become homeless. Will you still argue with me on the need of home insurance? But while selecting, be thoughtful to add additional covers including burglary and theft, natural calamity cover, etc. Have you ever wondered how will you manage your legal expenses in case of accidents? Or what about the medical expenses if someone gets injured? What if your vehicle suffered a damage due to vandalism, falling object, fire or flood? Are you covered? Not sure? Check what type of insurance you have for your vehicle. There are mainly 2 types: third-party insurance or comprehensive coverage. Third-party insurance will cover all the legal expenses, damage and injury to another person or property. However, a comprehensive insurance will cover anything which is part of third-party insurance plus any damage to your vehicle that are a result of accident or collision. It will also provide personal coverage. Add-on options like accessories cover, engine protection, zero depreciation are also available. But in general, comprehensive policies are expensive. So decide carefully on the insurance that you will be purchasing. So, to summarize the prerequisites, first you need to work on your mindset. Build up emergency cash for at least 3 to 6 months. Pay off your credit card balance. Reduce your personal loan and other loans as much as possible. Purchase term life for family protection, health insurance in case of medical emergencies, home insurance in case of disaster strikes, auto insurance to protect you from accidents. We'll stop here for today. In the next part of how to become rich, I'll tell you the exact steps you need to follow to put together a solid financial plan. If you have liked this video, please give a thumbs up and don't forget to subscribe.